Hi there, welcome to Neppy Invest. February reporting month is just around the corner, 2 and a bit weeks to go. One of my favorite months of the year. And some people call the lead up to reporting month as confession season, particularly true for January, because many management of companies have been away for on holidays, perhaps skiing in Zermatt in Switzerland. They've come back to do their real job, their daily job, and they've come to realization that the company is managing or are managing is either performing much better than expected or much worse than expected. Hence, trading updates. Now, you might see profit upgrades, which is our favorite type of announcement, or our least favorite type of announcement, a profit downgrade. Super Retail Group released a trading update on the 15th of January 2024, and the market liked it. Now, Super Retail Group consists of Super Cheap Auto, a Rebel Sports, which I do go in quite often, a BFC, Boating, Fishing and Camping, and a few others. And it seems like they're performing okay. However, there are a few interesting things in their commentary, which I'll touch upon at the end of this particular video. But first, let's have a look at some numbers in this trading update. The company provided us with first half sales growth, like for like sales growth, first half revenue, and also first half profit before tax. And they've also divided the performance of the business into the different units. So we can see which unit has performed best and which units are growing, or maybe which units are going backwards. They've divided the sales into overall sales and also like for like sales. I tend to focus on like for like sales because that is assuming that the company has opened no new stores, or the other way to put it is that is looking at the performance of all those stores that were open 6 months ago. The overall sales growth also includes those stores that the company has opened in the past 6 months. So what we're looking for here is like for like positive sales growth. And we have seen that with Super Cheap Auto up 3%, BCF up 2%, Macpac is flat, and Rebel down 3%. So by far, the worst performing unit or division of this company is Rebel with negative like-for-like sales growth. Now, when you look and compare the revenue and profit before tax of these different units, Super Cheap Auto is the best performing company or best performing unit in this company with the most revenue, $760 million of revenue, and the highest profit before tax, around 106 million. Rebel comes in at number two, BCF at number three, and falling way behind the other three is Macpac, and that's probably why I completely forgot Macpac is a part of this company. But overall, the group generated over $2 billion of revenue in the first half and just over or around $200 million in profit before tax. Now let's have a look at some interesting comments the management didn't include within this training update, and possibly the market ignored these or they found the positives far outweighed the negatives. And there are positives here and also negatives. I should have color coded this. Red, negative, and then maybe green, a positive. But they did start off with a nice spin. The group has traded well over the cyber sales and Christmas holiday period. They have maintained positive like-for-like sales growth in the first half. Now we get to a bit of a negative. However, cost of living pressures on the consumer did lead to a more constrained retail trading environment at the end of the second quarter. So are we starting to see the effects of rising interest rates on retail companies? The very fact that they mentioned here that it is having an effect in the end or at the end of the second quarter makes me a little bit wary about retail companies in the second half of financial year 24. Despite this, our customer proposition and the resilience of the lifestyle and leisure categories in which we operate underpin our performance in challenging economic conditions where consumers are sharpening their focus on value. I'm definitely doing that, and I probably would assume, even though I don't pay any mortgages, don't have debt, I'm still looking for value because of rising cost of food, stuff like that. So I'm looking for value wherever I can. That's just me. And I'm assuming that a lot of people with mortgages are doing exactly the same thing. Now to some other positive when it comes to gross margins. So gross margins in the first half of this particular financial year expected to be higher than the first half of financial year 23. That's a really good positive. I like to see gross margins increasing through time. That actually gives us an indication that potentially this company has pricing power. However, so again, however, so went from a positive to now another negative. Cost of doing business, CODB, as a percentage of sales has increased as a result of the impact of inflation on wages, rent, and electricity. So inflation is still having an impact, and it seems like the cost of doing business has affected Rebel more than the other three units. In fact, they mentioned it here. They probably should have spelled Rebel with a capital R, unless Rebel is actually spelled with a lowercase r. Anyway, so higher cost of doing business has impacted Rebel in particular, given the composition of its lease portfolio and its higher team member to store ratio. I've never really thought about member to store ratio or team member to store. Every single time I go into Rebel shop, there does seem to be quite a few staff there. So maybe, just maybe, they could decrease the staff at Rebel to increase or decrease the cost to increase the margins. Just a possibility, and maybe management even thinking of doing that in the future. But overall, the market liked this particular trading update from Super Retail Group. Share price up 5.7%. Share price closed at $16.71. And this is the chart of the company, Super Retail Group, going all the way back to November of 2022. This is actually a nice looking chart, share price in an uptrend. And the share price has really accelerated over the past 3 months, increasing from $11.40 all the way up to $17. And that was a high on this particular trading day. In fact, the high was $16.99, so just shy of this round number. So I wouldn't necessarily call this a breakout because the share price was already in an uptrend. But it's going to be really interesting to see how trading of this company shares go in the next few trading days. So I am recording this video after trading has finished on January the 15th. And also noticed on the last trading day of the previous week, so this will be January 12th, share price rallied a fair bit on that day as well. So I won't say loose lips, won't say people knew something, knew this was going to be a good trading update, or even that the company was going to release a trading update. But it's always interesting to see a company share price rally or drop significantly the day before a significant announcement from the company. Anyway, that's all I have for this look at Super Retail Group's trading update released on 15th of January 2024. The market liked it. I thought it was okay. There was some positive and also some negative comments within the trading update itself. Some reason to pause in our excitement of buying these retail companies because they might be looking cheap. I think this company has a P ratio right now around about 15, which is not necessarily low for a retail company that is facing potentially some headwinds moving forward over the next year or so. If you have any questions, leave those in the comment section of this video. Otherwise, I am not an advisor. If you do need an advisor, financial advisor, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.